Okay, good morning, everybody. This is a fireside chat, and it's designed to be a chat. So we've had a look at all of the questions that you guys submitted to us as part of the registration. Jeremy and I reviewed them, and we've tried to incorporate that into the content and discussion that we've planned for today. You are, of course, more than welcome to submit more questions during the session. So if you can do so in the Q&A area, that would be great. And then I can keep an eye on that whilst we're working our way through the questions that we've prepared for. I think Jeremy will make a start. So this is the last fireside chat from Waters Clewer of 2024, so quite exciting. And I'm delighted to be joined by Jeremy Hyman. So Jeremy has been in the industry for many years. I think your bio says 25 years. So Jeremy, I'm going to just hand it over to you to just tell us a little bit more about yourself.
Lovely. Thank you very much, Steph. It's a pleasure to be here on the last one of the year, which is like, got to make it a good one. I've worked with firms of accountants for 25 years, maybe a bit longer. So originally I was a partner at a firm called Berg Capro Lewis, BKL, and then I went away and did my own thing for a bit. And then for the past 6 or 7 years, we've been running JHA. So we work with maybe 30, 35 of the top 100, giving independent technology advice. And it's great. It's the best job I ever had. So
good to hear. Good to hear that you still love it after.
I do. Yeah. No, I do. I'm very lucky to do it. Very lucky to do it.
Okay.
So yeah, and it's nice to be here with Waters Clewer. This is a first for me as well. I don't think I've ever done an event or anything with you at all. So yeah, all very good.
Start of many, I hope.
Let's see. Yeah.
So Jeremy, I'm going to start with talking about efficiency. So this is a major challenge that we're seeing in our customers for their practices. So my first question to you is, what are the most effective strategies that firms can look at to streamline their operations and, to potentially free up their time for new opportunities?
Yeah. I think it's about getting rid of the drudge work, isn't it? And the processing and the kind of the repetitive data entry and transferring information from one thing to another. And firms become very comfortable with old ways of working that aren't particularly efficient, but are easy. It's like a comfortable pair of shoes that you really should have thrown out, but you just like them quite a lot and they fit. So key technologies to deploy to kind of streamline operations are around automation and integration. And really, it's about making sure that anything that can be done by a computer is done by a computer and not a human. Right. And it sometimes takes a brave step. And you see it all the time where people say, oh, I could fix it, I could automate it, but the time it's going to take me to do it, I could just get it done. And you've got to break that cycle and say, no, this time I'm not going to do it. I am going to automate it. And normally what happens is as you start to automate, you tend to tease out inefficiencies in the process itself. And so you fix those and you end up with a better way of doing things. The more you do, the easier it is. It's that first barrier of like, oh, I'm just going to keep doing it the same way, and saying to yourself, no, I'm not. I'm going to fix it this time. That allows you to start to break that cycle.
Yeah, and I'm even finding that in my role, like just trying to utilize technology to free up time. Like I think I've said it on a previous session, like ChatGPT and stuff like that has been really useful to me just as a kind of start of a term, like not starting from a blank page, like
Right.
having
Yeah.
something to work with. And obviously we're very focused in Waters Clewer on, the products that we're developing to really focus on that automation, and obviously integration is a big thing for us as well. So yeah, it seems obvious, but yeah, I guess you just have to take that first step, right?
And as I say, we get ourselves into a pattern of repetitive inefficiency. We do it this way because we've always done it this way. And a little clue over here is when people look at something and say, well, I think it's too complicated to automate, or it's too complicated to integrate, there's probably something wrong with the process, because
Yeah.
what we do is not magical, right? I hate to say it, but actually it's pretty transactional, it's pretty straightforward. And if there are oddities in the process that are making it difficult, iron those out, and then you'll find it's much easier to automate. So don't take that as a sign that I'm just not going to do it. Take it as an opportunity to improve the process and then automate it. And the integration point, so that when I've got data in one system, it copies it to another system. Like obviously, too often we do that by hand and
Yeah.
badly and with errors, and then we end up with low data confidence. It's a spiral down. It's not a good place to be.
Yeah, absolutely. So how do you think practices can manage like some of the more routine tasks to be more efficient and to prioritize those higher value activities?
You look for the repetitive processes that are going on. So you see them typically in things like payroll, or you see it in monthly accounting, or you see it in tax returns. There's a percentage of each task which is just not suited or worthy of human time. And it doesn't mean you have to do the whole task, by the way, end to end automatically. Just take out a chunk of it. So think about one particular bit. It might be a good example is payroll processing, where our clients will send us data in whichever format they want. However many times we say, no, send it in our preferred format, there'll be a percentage of clients who don't. So having an automated routine that takes that input, transforms it into data that we need and takes it on from there is a good example of just taking one little bit of a routine task and improving it. And you just need to pick them out, cherry pick them. And what you find is the more that you do, the more people around the practice will say, oh, I see what you did there. That would work for me. That would work for me. And so you end up with a sort of a virtuous circle of continually people buying into the idea and picking out little bits of what they do every day and pushing that into an automated and integrated platform instead.
Yeah, absolutely. So we've just touched on it then. So I think over the last few years, we are seeing that shift from compliance to advisory services. Wolters Kluwer, we've written white papers about it some time ago, actually, but it's one of those kind of recurring themes that we've seen. We've seen it being spoken about at Accountex and other industry events a lot. So for this shift, what steps can practices take to start that transition? And what do those kind of value add services look like to you? What are some examples of that?
I think it starts with a non-technology answer, right? So you said yourself there, for years we've been banging on about the need to move from sort of compliance to advisory, but the move has been slower than we might expect, right? And the reason for that is that people are nervous. They think that if they move into the advisory space, they will find it much harder to offer value to their clients. In fact, the reverse is true. It's much easier to differentiate in an advisory space than it is in a compliance space. So what we're seeing is that compliance is becoming the cost to serve has got to get lower and lower because it's simply processing. We've already said that processing is more and more going to sit on technology platforms, and therefore a lower cost base to get those compliance services delivered. Therefore, we've got to move into the advisory space in order to differentiate. That's what clients want to buy. They need to buy compliance. They want to buy advisory. So we've got to get into that. I think along the way, though, one of the challenges that a lot of the people we've got working within the firm are not built for advisory. Right? They came into the business to be compliance workers, not to be advisory workers. And there's somehow expectation that they're magically going to transform from being a compliance person to an advisor isn't always the case. And we've got to accept that as part of our journey from one to the other. You asked as well about like the steps that you can take. I think honest discussion and just saying to people like, this is where the firm's going. We'd love you to be able to transform with us into advisors, but we accept that maybe it's not for you. And people don't want to have those hard conversations, and yet they need to. The technology is there. Right? For years, we've been able to get our work focused in the right area. It's all about the people accepting that that's where the practice has got to go.
Yeah, and how, that's quite a mindset shift as well from people who, have been happy doing compliance tasks. What advice do you have from kind of, not everybody wants to do it, of course, but how do we encourage people to, start that transition and start developing those skills?
You start with a carrot and you end with a stick.
Yeah.
That's, I'm afraid, is the answer to that. So you try and paint a picture, right? And you say, look, this is how things could be, right? It's not that the firm's going to stop doing compliance work for a start. Compliance is the bedrock of our deliverable. It's just that we're going to lower the cost of delivering that compliance work. So you start by painting a picture and saying, look, wouldn't this be better? Yeah, wouldn't you enjoy this more? Wouldn't you have a bit more time? Wouldn't you have a bit more creativity? And sort of engage with your team and say, look, this is where we think you should be. There'll be a percentage of people who say, no, that's not what I want. I actually signed up for the job to sit in the corner and work on Excel or tick a box or whatever it's going to be. And either you accommodate that, or depending on your commerciality, you say, well, that's not us, right? Go and find another firm who wants to work that way, but we don't. So you got to be quite harsh. And that is that transition from like the incentive, the carrot to come in and then stick to say, well, this is what we're doing. You cannot have a firm not make progress because some of the people within it don't want to transform. Once you've
Mm.
decided that's where you're going to go, then you've got to go there. And either people will join in or they will go and find somewhere that is less transformationary, but where they'll be happier. And that's absolutely fine. Because,
Yeah.
because your next door neighbor firm's doing it. Like every other firm is lowering that cost of delivery. And they're doing that by switching people to technology in those compliance roles. So if you don't, then you can't compete.
Yeah. Have you got any examples to mind that of what those kind of advisory services look like? Do you have like some examples of what that could look like?
Yeah, I have a great example. I have the world's best accountant who is my accountant actually, and I got a phone call from them once saying, "Well done, you've had a really good month." So like number one, that's a great call to get from your accountant, right? It's just, I mean, it's not hard, but how many accountants reach out to their clients having looked at their data and said, "That was really good. I think I'll pick up the phone to Jeremy and say you did really well. So that was terrific." And then, very intelligently, the follow up was, but I can see there's going to be a working capital requirement because you've had a really good month and so that's got to be funded. Is that something we can help you with? So that whole conversation is a proactive advisory conversation based on data that everyone's got. You know, everyone on this call now is using Zero, they're using QBO, they use all those things, but that data isn't driving advisory. It's kind of producing an output, a monthly report pack or whatever. No one's interested in that. They want the narrative. They want the outward call saying, "I've looked at this. I noticed that. Here's something that I think you should be aware of." And that, to me, is the essence of better engagement driven by technology, lifting the load, doing the data analytics, and saying, "And therefore, I think you, Mr. Accountant, should do this." Yeah. Whether or
Yeah.
not that individual does or doesn't is up to them, but the data should be served up to them to provide for that conversation. And if we've got it right, if we've reduced workload by getting rid of some of that compliance work, that we don't really want to be doing, I've got time to pick up the phone and just ring up the client and say, "We haven't spoken for 3 months. I thought I'd phone, see how it's going." We're terrible at that. And I suspect, Steph, and this is the reality, I suspect that we could do more of that, but we're scared of doing it. We don't want to pick up the phone to a client. We don't want to reach out to them. We just hope that they don't ring us for anything. So there is a mindset attached to this as well that we've got to tackle.
I mean, it's nice to have a conversation like that rather than just the standard, send me this, I need your data for this. Like it's not
Can
a
you imagine a worse conversation?
relationship, isn't it, with your
Yeah,
customer?
yeah, that conversation is terrible. We want to do your tax return. We haven't got X. Right, okay.
Yeah.
Or I've sent you your tax return. Here's the bill, and that's my one call with you during the year. That's not the way to foster or build a relationship. That's no other professional would want to work that way with a client, and clients don't want to be worked with that way. So finding reasons to have a conversation and using the data at our fingertips just to drop a nugget and to make a call is really very powerful. Your question was like successful transitions, right? I don't think it is a transition. I think it's what we should be doing anyway, right? It's just that we need to persuade ourselves to do it and have the data to inform ourselves to make that call really simple.
Yeah, and I guess with the compliance changes like coming up for MTD as well, it's going to be really important to provide that support and additional advice
Yeah, of course.
as well.
Yeah. Accountants have got a very valuable position. They are the trusted advisor of choice. People don't have that kind of relationship with, say, their lawyer because it tends to be deal by deal. They don't have that relationship with other big financial institutions like their insurance business or their, bank. They just don't believe in them at all. Their accountant is somebody that they trust to advise and to guide them. And the accountancy firms have got to stand up and step up to that opportunity and be worthy of it and say, "Look, here's some things that I want to talk to you about or advise you about, or that I see in your data that are worthy of a conversation and some narrative."
Yeah, absolutely. I mean, speaking of that, then, so I think one of the common challenges is yes, they know they need to be doing more of this, but how do they demonstrate that value back to the customer and be able to charge for it? So, how do we help our accountants get their clients to understand the value of it and the reason why? Because I think a lot of accountants that we've spoken to amongst our customers, they give this away for free quite a lot.
Yeah. Well,
How do we move away from that?
I think you got to turn it on its head. I think
Mm.
I think I think it's going to be increasingly hard to justify the non-advisory work when I can get the data that I need by just firing up Zero and running a report, or when I can log on to HMRC and see information or Companies House. All of that information is increasingly coming closer to the consumer of those services, and the accountant is getting out of the loop. The
Yeah.
one place where it's easy to demonstrate value is by giving really good advice, because people value that, because it makes an impact on them, and it's about getting closer to your client and understanding their business or their personal needs or their life cycle position or wherever it's up to, and giving yourself the time and information to do that. I would put the question, if I go to a client and I say, look, I'm going to charge you £500 a month for my services. What am I going to get? Well, we're going to produce a monthly report pack. I don't think so. I can do that on Zero for nothing, or on, what's your one, Twin, whatever it's called.
Twinfield, yeah.
There we go. I call it Twin Peaks, but we know Twinfield. But there isn't value in that. The value is somebody looking at that information and saying to me, Jeremy, this means this means this, and getting into that. So often we see correspondence from firms to clients, which assumes that the client is also an accountant. Yeah, I've been reviewing your IR35. I don't know what any of that means. So we have to use the time that we've freed up to become closer to our clients and their language and their important issues and what it is that matters to them. That's the golden rule. If you get that right, then you'll never have a problem with a charge out, and you'll never have a problem with a fee.
Yeah.
That's my view.
Yeah. Great. Okay. Well, just a reminder to our audience, if you do have questions that you want to post to us along the way, please do submit them at any time. So I'm going to move on to the people side of efficiency here and talk about engaging staff and managing client relationships, which we talked a little bit about anyway. But how can practices encourage their teams to adopt like new workflows and encourage these efficiency improvements? I think we touched on it a bit earlier, but if we can go a little bit deeper into that side of things.
Yeah, I mean, our teams are made up of accountants, so show them the numbers, right? One of the most effective things that I see people do is put up a bit of a league table and show the results of where people are at. And you pick a metric that matters to the firm, but also matters to the teams themselves. So that might be an efficiency metric, it might be a recovery rate, it might be a cash collection, it might be an on-time delivery of work. But you've got to start to associate good behaviors, which the technology can deliver, with goals that are valuable to the individuals that can attain them. Yeah. So if we say, look, as a business, we want to get our debtor days down from 45 days to 40 days. Yeah. Then we start to break that down to a team and say, well, amongst the portfolio that you're working on, you're over here, and we need to be over here. And this team's got over here. So we introduce a sort of a gamification, a bit of a competitive element, and it's terrific as long as the goals that we are setting out are appealing and achievable with the technology that we're providing. And that, if you like, is the reverse. That's the technology side of the equation. We need to give the people the tools to be able to do that. So you asked for examples, and I'll give you a simple example, right? Letters of engagement. We've all got systems that produce letters of engagement and go out. And one of my favorite questions for a firm is, on which page of your letter of engagement is your direct debit mandate, right? So that when I send it out, it says, and sign the direct debit over here, or click here to come through to the direct debit and do it. And the number of firms who don't do that is mind-boggling, right? But let's say we put it in there. We then say to a team, every time you engage a client, make sure they're on the direct debit. Well, okay, we managed to achieve 40% coverage. Okay, but we want to have 70% coverage. So I'll tell you what, if you don't ask for a direct debit, give me a reason, right? And you can start to see the firm saying, oh, I don't know about that. That sounds a bit, and yet you've got to keep pushing. So the engagement strategy for a team is to say, look, this is where we're going to be. This is the goal. Here's a set of tools that I'm giving you to use. And if that doesn't do it, I need you to tell me why you didn't use the tool that I gave you. Yeah. You need to push the accountability in such a way that it's harder to not do something than it is to do it. Because at the moment, you look at a firm, it's easier to not do something and just to do it the same way. You need to change that equation so that it's harder to not do it and to have to give a reason for not doing it. And suddenly adoption goes through the roof. So it's still my stick and my carrot and my stick. Show them why, give them the tools. But then if they don't adopt, they've got to explain why they didn't do it at a granular level. And that really pushes through change.
Yeah, absolutely. And how often would you kind of check in with the team on progress here?
I think, yeah, certainly. I mean, often. And also sit down with the people that aren't doing it and say, what's the problem? Like, where are you getting stuck? Let me show you how to do it. It's not like from an on high, yeah, this is how it's got to be. So crack on and do it. It's got to be assisted. And there will be people who will jump in, and there'll be people who won't jump. Everyone's got different skill sets. And you sit down and you say, well, okay, and also take the feedback. If they say, well, I would do it, but this screen here is really hard, or this process here is a bit convoluted, Great, let's fix it. Let's make it easier. Show me where you're getting stuck, put that into an iteration and get it done. And in that kind of very close-up engagement and asking people why things aren't going the way that as management or IT we thought they were going to go, and then fixing it is really important.
Yeah, absolutely. And in Multiscale, we've had what we've previously called like change champions. So like, identifying those who are really kind of bought into it and, encouraging them to, try and convey that to the rest of their team members as well.
Yeah, although I think you've also got to talk to the people who are least bought into it, right?
True.
Sometimes it's too easy just to say, oh, we've got a software champion, we've got a change champion, we've got so and so, and she's great and whatever. We also need to find like Wendy in the corner and say, well, hang on a minute, what's the issue here? Like, what's going on? How can we help? So I think both strands need to be, fully pursued.
Yeah, and I know we've spoken about this a little bit in the previous section, but just you're setting goals for the team, and how do you then communicate kind of that new adjustment and the kind of changes that you're implementing to the clients as well?
Yeah, that's a very good question. Lots of transparency, lots of openness, and
Mm,
tell clients what you're doing and why.
yeah.
Right. So if we're nervous of telling our teams, we're even more nervous of telling our clients.
Mm,
But say to a client, like, you want us to be as efficient as possible. You want us to be as modern as possible because you want great value for the fee that we charge you. And so here are some of the things that we're doing. We're bringing in a portal. We're going to move to more electronic interchange of documents. We're going to have more collaboration about your accounts product, whatever it's going to be. But share the story with them. And also, like, if it doesn't work, talk about that as well. Right? We're terrified of failure, aren't we? We're terrified of like trying something in case it doesn't work. So
mm,
try it with 10 clients and say, look, we've picked out 10 clients. We've got a new way of processing our bills and making payments. We'd like to try it with you, right? Give them the backstory, say what we're doing, and give it a go and bring them along. And again, it's a bit like I said with staff, there'll be a percentage of clients that don't want to do that, that don't feel that that's for them, and that's fine as well. The firm's got to decide what kind of client it wants, and sometimes that's an aspiration, right? So it's not what kind of client it has, it's what kind of client it would like to have, and then set the direction of travel to service that kind of client. And if there's a percentage of clients along the way that say, oh, well, we preferred it when we could come in and do this and whatever and post it, so great, you'll have to find another firm because we don't do that anymore. And that is a very hard conversation. But quite often, I must tell you, we see firms that pander to an outgoing generation within their client base and not an incoming generation, right? So moving to electronic exchange of documents, which is simple, right? The outgoing generation say, well, it's not the way that we used to do it. But the next generation say, if you don't do it that way, we're not going to work with you. And there's no point servicing a diminishing and exiting generation of client. You've got to service the one that's coming in. So yeah, be honest and be brave and be transparent and be willing to fail a little bit if that's what has to be done. But absolutely, bring your clients with you, and the ones that don't want to come, just say fine. That we're sorry, but that's fine.
Yeah, that's really, really interesting. And, I think in Multiscale, it's a slightly different scenario, but we do work with customer beta groups to test out new software. We've just had an innovation customer advisory board meeting last week. So, we've pulled, some individuals, who want to see change, and, we're actively working with them. So would you invite, that kind of customer feedback into this scenario as well to kind of inform these
Yeah,
strategies for what your vision looks like, but, the steps to get there, and, what the customer needs from
yeah.
the practice?
Customer pays the bill, right?
Yeah.
It's pretty simple, isn't it? And so if we don't listen to our clients, we don't deserve to succeed, right?
Mm,
We might be very clever, we might be very good, but if we don't listen to our clients properly and deliver the service that they want in the way that they want it, they'll just go somewhere else, right?
yeah.
And that actually can be helpful, just to point that out. So, we lack time, right? As professionals, we're all time poor. And the number of firms I sit down with who say, "Oh, we just haven't got enough time to do things," is quite, universal. But then when you analyze it, actually, we have got time to do things. It's just that we squander our time on things that we shouldn't be doing. So in a way, if we set a path which matches the kind of client that we want, and some attrition occurs along the way and some clients leave, there's no harm to that. That gives us more time for the clients that we want. And firms really ought to fire clients and indeed team members from time to time, but we don't. But a softer way is to go on a direction of travel, and then through natural attrition, the ones that don't like it go. And that's beneficial. As long as the ones that stay are the ones that we want or the ones that we wish to have in the future, fine.
Yeah, just be brave and stick to your guns a little bit there.
Yeah. And we're terrible at this. No one ever gets rid of a client because it's going to be their last client. We're never going to get another client if we go, that's not true. Right. But it's hard to see. This method of transformation to bring the people that want to transform is much kinder, at least as effective.
Yeah, absolutely. So if we're looking kind of to the future, what do you see as the biggest opportunities for practices in the next, say, 5 to 10 years?
10 years, I'm not gonna go for a 10-year window. That's
Okay, 5 years.
I think 5 years is quite brave. So we can't ignore the impact of AI, right? You can't have a conversation about technology without, thinking about AI and where that's going and the impacts that will have. Just to start with that, I think my view on AI is that it's immature, right? It's incredibly exciting, but it's immature, and our expectations far exceed the deliverable that we can experience at the moment. You mentioned ChatGPT, or you've got Gemini, or whatever. There's plenty of good LLMs out there, but they're not quite good enough that you would really want to, bet the bank on them just yet. But they're getting better and better and better and better, and they're more and more pervasive. So Microsoft have got Copilot in just about everything, right? A couple of the sector vendors, including yourselves, are starting to build AI into core products.
We
And
are, yeah.
sometimes they've got to decide how fast they want to go. Do they want to innovate? Do they just want to wait for vendors to supply what they need? Where are they on that journey? But its impact is inevitable. There's no way that tech firms have spent as much as they have on AI that they're not going to keep at it until they get the return that they need to pay back that investment. That's coming. What AI will do, and I see these as being the main areas, it's terrific for search, finding out data, right? So as we've all lived for years with Google search as kind of being the go-to place, AI will become that. And it will look across the public sector and within your own systems and say, right, I found this information. It's terrific for baseline content creation. So as you said, like at least giving you a starter for 10. Considering all of this, this is what I think's next. And it's very powerful for that. I think where we have to be careful is not letting it become client facing, right?
Mm.
That we're so far off that being ready that it's just not for now. But informing the professionals within the firm and lifting again some of that drudge work, terrific. With the right safeguards and privacy. I know, but it's not an AI webinar, but that is massively impactful. That doesn't convert into an opportunity, but what it does is it enables us, and this has been the theme, I suppose, that we've talked about, to have a bit more time to go and speak to our clients. And really, that's the key. I used to have a partner, and he said, never email when you can phone, never phone when you can meet, right? Which was a terrific adage. And it's all about getting close to your clients. What's next? What can we do? What have we seen elsewhere that will inform you, that will give you confidence in this next move that you're doing? And that's very difficult for accountants. A lot of people didn't enter the profession to be that client facing and to get out there. And yet that's the key to everything. Go and visit a business. Go and see what they do. Go and understand how they work. That's where the opportunity lies. It's moving away from the comfort of the spreadsheet and the tick box and the kind of process and into the slightly less comfortable world of getting close to clients and understanding their business that you can add value to them. And that is a guarantee of success for the future.
Yeah, absolutely. Um, oh, I had a thought and it's just popped out of my head. And also like actually it's to come back. Like ask like going to like so we run events for accountants and we really want people to encourage them to talk to each other. Like
Yeah.
would you kind of, recommend that as well? Like, we do conferences or we do, networking dinners and such. Like I think people underestimate the value of just like, if talking about their challenges and just hearing insights from their peers about, how other people are doing it and taking that into consideration.
I think we see two sides of that. Right, there's a negative side and there's a positive side.
Yeah.
The negative side is what we call the conference brag. So it's where someone's been to a conference and they said, "Well, I heard from the managing partner of such and such a firm that they just bought this and everything was brilliant." Right? It's just not true. Right? It was probably a lot of pain and effort, and it's not half as good as they say it is. So there's that comes out of it. The flip side, which is much more important, of course, than is the positive side, is that it's a safe space to sort of discuss some of the challenges that are faced. I said to you at the top of this that we act for, I don't know, a third of the top 100, right? And you see the same situations again and again. What do we do with our tech? What do we do with our people? What do we do with our clients? How do we fix our processes? And if you can go to some kind of event, some kind of, get together or whatever, and just talk freely about it, then you will find, or any firm would find, there's a lot of commonality, and they can get some confidence from how other firms have approached those challenges and resolved them. And whether that's fostered by you as a vendor, whether that's fostered by an events business, whether it's fostered by I don't know who, it doesn't really matter as long as there's some rules around it and you can go in and speak freely. I think it's terrific.
Yeah, as long
They're
as you're not
shy
in
as
the
well,
way.
Steph. They're not easy. It's not easy to get things started. So,
Yeah, I think you've said it before, like communicating and, yeah, just looking for the solutions. So
I'll just chuck in one other tip on that as well, because sometimes people see what it is that they need to do, but they just find it that they're dwarfed by the magnitude of change, right? So
mm,
they look at it and it's like, oh, it's just so much. In fact, I was chatting with one firm and they were like, we don't even want to know what we could be doing because we know it's so much it's going to scare us, right? Which is a slightly peculiar view. But what I recommend there, and this is a great thing if you sat down with peers and you've got some ideas and whatever, avoid monolithic change, right? Avoid these big monolithic projects where we're going to go from this to something completely different. Much better to have step projects where each incremental step is in itself beneficial. And even if you stop there, you've achieved something. And that way, you do a little bit, you prove it, you gain some credibility amongst the more skeptical elements within your firm or even amongst your clients. Then you do a bit more to build on that. And you have this kind of rolling stone of being able to make change and people believing it's going to work. And that, like when we spoke at the beginning about where to automate and where to integrate, just do a little bit as a proof. Yeah, we all thought it wasn't going to work, but it turns out it worked really well. What's
mm,
next? And so that way you're more likely to be able to affect change and to act on the things that you learn from your peers.
yeah, absolutely. And once they've kind of identified these opportunities, we've said before it's a very competitive market. So what would your advice be to, to go ahead with these changes, but how do people kind of stay resilient? It's a very fast paced kind of evolving industry, lots of compliance changes and everything else being thrown at these guys. So what would your advice be there?
There's a couple of technology tools that can be deployed just to help with the resilience point. So to give you two examples, one is some sentiment analysis, right? So we traditionally work on the basis that our managers are managing their people and so on and doing a good job of it. Quite sensible to plug something into all of your document management or your email that looks at any keywords that maybe are worrisome, a word like mistake or error or whatever it's going to be, and pull that out because that means we can escalate something and deal with it before it becomes a crisis. So that's a good use of technology to give us risk mitigation and some resilience over there. Another great example is mechanisms to avoid client neglect. Okay, so we've all got a stack of clients where we can name the top 10%, not 20, maybe the next 20%, but we can't name the bottom 10% or the bottom 20%. Our competitors are nibbling away at those with new services, with new marketing, and we need algorithms that look at our amount of engagement that we're having with a client and say, given the worth of this client to the practice, given their future value, given their like of the practice, whatever it's going to be, we're not spending enough time with them. Get in touch. And things that stop us neglecting clients and the white heat of excitement of new work versus the cold comfort of maintaining existing clients, that's where we can use technology. That also goes to our team dynamic. We talked about different team members evolving into different things. There's no reason why some of our team can't be diverted into the slightly more boring end of client maintenance and avoiding those neglected clients and keeping them happy if that's the way they want to be. So we've got to kind of be able to adjust the focus of different people in the firm to where their talents are best suited.
Yeah, absolutely. And, providing additional training if that's what's necessary as well.
Yeah, help.
Build those skill sets out.
Yeah. Also, the passage of time is quite cruel. And people hire into a firm of accountants and stay there for 10, 15, 20, 25 years. And if we don't put effort and energy into keeping them up to speed with where we're at, and then we're disappointed when they're not, it's our fault. It's not theirs. They've been in the job for 20 years and never been sort of encouraged or educated or enhanced, then sure, they're going to be out of step with where we want to be.
Yeah, and like this is going a bit off script, but like how, would you see one of the kind of future challenges in like attracting new talent? Because I think the expectations of the kind of next generation coming in is quite different from what practices are used to.
Yeah. So absolutely. I mean, just think about two firms, right? One firm hasn't modernized, hasn't transformed, and one firm has. And you come along as a new recruit, Steph. You say, well, I'd like to come and work at a firm of accountants. Tell me, Jeremy, what's it going to be like? I say, well, Steph, you're going to get these emails over here, and then you're going to take all the information and tap them into Excel, and then you're going to copy this into another system over here, and you're going to produce a report, right?
Yeah.
Or come to this other firm where there's some AI enablement. It's going to take your data, it's going to produce a report, and you're just going to write some comments on it and talk to the client every month about what's happening.
Yeah.
Where are you going to go, right? So in terms of talent acquisition, technology is a huge factor. And by the way, it's the same argument for the client. Client's paying £500 a month for that service. They don't want to pay Steph to be tapping it into Excel. They want to be paying Steph for advice. So it's two sides of the same equation.
Yeah, absolutely. We have actually had a question come in, which is great.
Yeah.
So I know we're not going in specifics of like tech solutions, but they're asking, are there solutions that you've seen for finding and avoiding client neglect that have worked well?
Yeah, absolutely. So what you need to do is work out what an important client is or is not. So you need to attach a metric to what makes a client valuable. And the client can be rated on different things. So for example, it could be spend, it could be recovery rate, it could be on whether they pay their debts on time, it could be whether or not their books and records are presented in a timely fashion, whether or not they engage with the firm, whether or not they refer the firm, whether or not they receive mail shots. So you end up, you need to build out a sort of a score card for every client. You then apply that scorecard by scanning through your practice management system. So for you, it's CCH Central. There's other products are available. So,
Yeah.
so you scan through it and you give each client a score. You then look at the timesheet entries, right? And you say, right, how much time has gone to the client and when? And if the amount of time being booked against that client, whether it's chargeable or not, doesn't matter. But if the amount of time being booked against the client is not worthy of the score you've given the client, then that client's at risk. So what you do is you generate a task for the manager of that client to say, pick up the phone and talk to them, and here's why. So it takes a bit of crafting, it takes a little bit of development ability, but not a lot. And that would give you exactly that neglected client perspective. And that can just run every night, just churn through it and say, what's going on over there?
Yeah, absolutely. And yeah, we've got solutions that can flag those things as well. So get going on those. Okay, well, we've kind of come to the end of the content that we've prepared. I'm not seeing any other questions, so I think, Jeremy, we can probably call it there. So thank you so much for your time and your insights. I hope everybody on the call has taken a couple of nuggets from this to kind of take forward into their firms. So yeah, I think that's all that's left to say is thank you very much, and we'll see you on the next one, probably in 2025 now, but we appreciate your time today. Thank you so much.
Thank you very much indeed. Thank you.
Bye, guys.